This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack, but with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
Good afternoon and welcome to Haystack Help Radio. Thank you so much for joining us today. A special edition of Your Money Matters, brought to you by our good friends at Affordable Interest Mortgage. And once again, your one-stop shop for all your mortgage needs. And you can reach them at 720-895-0500. Again, 720-895-0500. Their website, aimortgage.net. And with that, we will welcome the owner of Affordable Interest Mortgage, Mr. Kurt Rogers. How are you, sir?
I am fine. Nice to see you back in country.
Great to be back in the country. You know, we were in South Africa for about 10 days hunting and had a great time. But it is great to land back in the USA.
Come home.
Yeah, it sure is. Absolutely. But no, we had a great trip. Took my brother-in-law and, of course, my sister passed away in April. So it was great for us to spend some time together and get him away a little bit. And we just had a great trip.
Now, I understand that you're going to be building another room under your house to hold some of these animals.
I may be building another room for me to live in. Yeah, because my wife goes, don't you get any more taxidermy. Yeah, but yeah, we got a couple things, but everything went real good. But we're going to be talking about healthcare a little bit later, and I'll go ahead and welcome our guest, Greg Lackey. And Greg's no stranger with our show. He's with the Accelerated Insurance Group. How are you, sir?
I'm doing well, thank you.
Man, your job's so boring right now. Nothing going on, no phone calls, no worries. Wow.
It's kind of nice and easy.
Yeah, wish I had that job.
Come in at 9 or 10, have your coffee.
Right, yeah, we'll see how this turns in November.
Well, before we get to that, Kurt, let's talk a little bit about mortgages and all. You know, a lot of times, different advertising that you hear, people always talk about the mortgage insurance. First of all, educate us a little bit about it, what that is, and then who needs it. Do we need it? Good or bad? What's going on with that?
Well, for some people, mortgage insurance is good. And what mortgage insurance does is it insures to the lender that the payments are going to get made to them. It's an insurance company that backs that loan. And that normally happens when you're above 80% loan to value. You're going to start running into mortgage insurance. It will always happen on an FHA. Whether you're doing 50% loan to value, you're going to do that. But the advantage with FHA is the rates are normally considerably lower than a conforming loan. So the mortgage insurance is going to move you up, but it also allows some people that can't qualify for a conventional loan to turn around and come to an FHA. You can have lower scores. You can be down around 580 or 600 and buy a property where with a conventional loan you could not.
Gotcha.
So the mortgage insurance guarantees that the government or someone's going to pay that lender if you default.
Right.
So they can take that risk because lenders loan money by risk.
Mm-hmm.
Whatever the risk factor is, that's how they determine the loan of money. Now, a lot of folks that will start with an FHA loan can, in a very short period of time, what we're seeing is 6 months to 8 months after they get the loan, they're coming to us and refinancing and getting out of the mortgage insurance. Because once you have the loan, then with the values going up, we're able to refinance you at 95 to 97% loan to value with no mortgage insurance. So all of a sudden, we can get rid of that payment of an extra $200, $300, $400 a month. So that's what you're seeing going on right now. Some people will start with it, then turn around 6 months to a year later, get out of it.
Sure. Okay.
So it works pretty well for them.
Great.
Because mortgage insurance is not tax deductible. Your interest rate is, but the mortgage insurance as of January 1st this year is not tax deductible.
Right. Are you finding, is the purpose with refinancing a lot of times to get cash out, or is it, people just trying to lower their interest rate a little bit? Is it twofold? I mean,
well, there's a lot of reasons that people are doing that. Some people are saying, I've been in the home for 4 years. I want to refinance. Rates are better, but I don't want to go back to a 30. So they'll refinance to maybe a 22 or 23 years. Lenders have come out with, you can pick the term of your mortgage, which allows people to say, if I want to pay it off quicker, I can handle an extra, instead of going from a 30 to a 25 to a 20, you can pick the term and understand that payment and pay off your home faster. So you have your equity much quicker. A lot of people now, especially with home values going up, they're refinancing a home to maybe pay for school supplies, I should say, because that's got quite expensive this year. That or they want to do some home improvements. They'd like to move to a nicer house, but they understand they get a lot for theirs, but it's going to cost a whole lot to buy the next one. So they're taking cash out and they're redoing their kitchens or their bathrooms or they're finishing their basements, and they're improving the value of their house and it's almost making it look like it's a brand new home.
Gotcha.
That or paying off debts. Our credit card debts have seemed to escalate over the last couple of years. So people are pulling out that equity without really hurting them.
Mm-hmm.
You know, you don't want to go much above 80, 85% loan to value. And because home values have gone up, you're able to do that and still stay at the 80% and pull cash out, lower your payment, pay off all your debt. That's where you're saving anywhere from $500 to $1,000 a month because you can get rid of all of that.
Right.
So there's a lot of reasons for that.
One we always want to talk about, just a couple of minutes here, and then we'll get on our topic today, is what you call the asset manager loan.
Yes.
Tell us a little bit about that.
Asset manager loan is an extremely popular loan. And Greg, the man that we have on the show, he actually has had this loan for quite a few years. And he can tell you about it. But it's a loan, it's a mortgage with a checking account, unlike any other mortgage. And what it does is it basically, when you put your money into this checking account, it basically pays you the same rate as you're paying on your mortgage. It then takes that and applies it to your principal, which drives down your payoff. And it does it automatically. There's nothing you have to do. When it does that, it drives down your payment. So for the first month, when you deposit, let's say $5,000 and you spend $4,000, your payment might go down $8. Well, the next month when you put in the $5,000, you're not going to spend the $4,000 and all the bills because your house payment's less. So it might now save you $10. And it keeps growing like that. Your payment goes down, you're paying off your home faster, and you're also driving your interest rate down. People seem to think that the interest rate determines the profit. It's just the opposite. Pay less profit to the bank, you're driving your rate down. The average consumer I have is about 2.6 is the interest rate on this loan when they're done, and they don't change one penny of their spending habits. Not one penny.
That's what that is probably the hardest point, Greg, and since you have this, you can chime in, to wrap your head around. Most of the time, if you want to pay anything off early, you got to change something in what you're doing, and none of us want to do that. But was it hard for you at first to understand that too?
Well, it was impossible.
Yeah.
Now, I was fortunate. My wife at the time was in the title business and was calling on Kurt, and Kurt was trying to explain this to her, and she would come home to me and try to give me, a simpler version. And I just, again, I had difficulty. And so I went and met with Kurt a couple times, and we discussed things, and then it probably took me about a year and a half. And I finally pulled the trigger on it and said, I'm going to do this. And that's been probably 8 or 9 years ago. And I will tell you, it is the greatest financial product you can have, bar none. And it's changed our life because there's ups and downs, in life, whether it's, some things that happen to you personally or financially or so forth. And just knowing that, you've got money that you've put aside, and to Kurt's point, not changing one thing that you do every day, and that's pay a mortgage or pay insurance or whatever it is, that you're actually building an account. And the other thing, too, I think, Kurt, is all of it. I don't think anyone ever thinks they can pay their house off.
They don't believe it.
I just think that deep down, they're not certain that that's possible. And all of a sudden, when you pick up that statement one month and you look at it and you say, wow, I only have X amount of dollars to actually pay this off, your motivation changes. Your spending habits change. For my wife and I, all of a sudden, maybe we were like, well, let's not necessarily, go take that trip. Let's put that money towards getting this house paid off. And it changed us mentally.
Yeah, you don't go buy that car or buy that new furniture.
No.
You start to see where your money's really more powerful.
Exactly.
Yeah. I actually had a customer that he's been in the loan 2 years, and he called me up. He said, I want to buy another house. I said, well, what do you owe on this one? He said, Kurt, I've paid it off. His original loan was $236,000. And in 2 years with this loan, he paid it off.
Wow.
He amazed me on how, and he's a police officer. They don't make a whole lot of money.
Sure.
And he paid off the loan. It's amazing how fast it can happen with money that you don't even know. You make all your money work for you.
A young man that I worked with about that same time when we got involved in this 7 or 8 years ago, I've seen him turn this thing into 3 properties that he's just about free and clear on now, and it's just changed. It's changed his financial fortune.
You look at your money differently.
Differently.
Yeah. We have this paradigm in this country that we think that a 30-year fix. We're the only country in the world that does it. That a 30-year fix is the best loan, and it's good for a lot of people. But there are other ways not to pay all that interest, because when you look at a 30-year, it's compound interest. They re-amortize that loan every month.
When interest rates lower, it's just the bank's making more money.
That's all it is.
It's all it is, because people will run over there and restart that loan.
Right.
That's what they'll do. And again, I think that speaks to the mentality of us. No one ever really believes that they'll pay their house off. But as you get into your 60s and you start wondering, okay, how am I going to do this? Where's this healthcare thing going to go? What do those costs look like for me? I just think that if you can have your house free and clear, that you've got one step in the right direction.
Yeah, you can handle the speed bumps of life.
Exactly.
You lose a job, you've got a medical, you can handle those.
Sure.
You don't have to worry about touching your 401k or your retirement. You're safe.
Well, if you'd like more information on that loan or any other types of loan, refinancing, reverse mortgage, whatever, affordable interest mortgage can help you. And their number is 720-895-0500. Now, one reason you might need to take some cash out is to pay your health care. Okay. Greg, man, what are we going to do? This is the most insane thing I have ever seen. Politically, whatever, people just can't even agree on to even bring something up to discuss. And all the time, we're just going to get killed in this rate-wise.
I'm not sure people even understand what it is they're trying to discuss. Mm-hmm. I mean, the stuff that I read and listen to and so forth, it's amazing to me how uneducated a lot of people are in regard to healthcare. And that's what disappoints me is, I think let's have an honest conversation about it instead of, it's the Broncos playing the Raiders. Right. And that's where it seems to have gotten is, it's just a political football, the healthcare is, or I should say health insurance.
Yes.
Because as we've talked so often in this program, there's a big difference between healthcare and health insurance. And the debate we're having today is health insurance.
Mm-hmm. What do you think, when you saw what was happening, what do you think about the bill that was designed to repeal Obamacare? And as far as it got this time, what was the one thing that seemed to blow it up, to make it just kind of disintegrate at the end?
Well, the expansion of Medicaid is what is kind of the hurdle for some. At first, I was kind of, like, hey, maybe this skinny, repeal and replace deal is a good thing. But the more I've thought about this, I'm actually on the side of let it just go.
Let it die on its own.
Let it die on its own. And I know that is extremely unpopular.
Right.
But my reasoning for that is we don't seem to react to anything in this country unless it becomes a catastrophe. And look no further than 9/11. All of a sudden, 96% of this country came together. Mm-hmm. And right now we are so divided that I think it's almost impossible to have honest conversation without politics getting involved. And unfortunately, healthcare is a problem that we all will face possibly someday.
Yeah, everybody's going to have a healthcare issue eventually.
Exactly. But we can't, right now, this thing is, like I said, the amount of misinformation that's out there trying to support an argument or a debate. I mean, you can't even have a serious conversation with anyone because they'll just immediately get emotional about it. I mean, we saw this at Cory Gardner's office.
Oh.
And to me, that's a shame.
Mm-hmm.
It's a shame on both sides. I mean, I'm very disappointed in Cory Gardner. Extremely disappointed in him. And the reason being is because I don't know why he kept thinking he should play in the middle. You got to take a side on this and explain your side. And understand that 50% of the people are not going to like you. But when you play in the middle, all of a sudden now 100% of the people don't like you.
Just walk down the middle of the highway.
Exactly.
You get hit from both sides.
Exactly. And he is...
It's flat.
Yeah. I mean, I don't know what he stands for. I would... Other than photo ops, he's really good at that. I noticed the other day he had a tractor and a combine behind him. I wonder if he can drive one.
That might be his new job.
I grew up in rural America.
Yeah.
It's like an old guy used to tell me, he said, just because they have a belt buckle doesn't mean they're a cowboy. He goes, don't call him a cowboy till you see him ride.
Wow. We're going to get into a lot of this. If you got any questions or comments about health care, your insurance, we'll take your calls. 303-477-5600. Again, Greg Lackey is with us. DesignHealth.com is his website. You're listening to Haystack Help Radio and a special edition of Your Money Matters. We'll be right back.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code Radio50. 303-325-2776. That's 303-325-2776.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt, make that long-needed home improvement, or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? Paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR, NMLS 298191, Equal Credit Lender.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analyst has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analyst is an official Haystack Help registered company.
Tired of walking into gun stores and seeing the same guns everywhere you go? Check out our sponsor, Old Steel Historical Firearms. Hi, this is Scott Watley of Sportsman of Colorado. At Old Steel, they specialize in the purchase and sale of historical firearms. Need to get your firearm collection appraised? They can help. Buy, sell, trade, and consignments are welcome at Old Steel. Open 10 to 6, Monday through Saturday. Old Steel Historical Firearms is located at 12 East Girard Avenue in Inglewood. That's just 2 blocks north of Hamden off Broadway. Now you can own a piece of history at Old Steel Historical Firearms. Call 720-662-7252. That's 720-662-7252. Check out their website, oldsteelguns.com.
Well, we did it now. Hi, Dan Johnson from Lynn-Lyle Chevrolet, and we received a special allocation of over 600 new Chevrolets, and we're out of room. So to relieve our problem, check these deals out. A 2017 Silverado Crew Cab 4x4 for up to $11,000 off MSRP, or lease a 2017 Chevy Cruze for only $199 a month, sign and drive, or a 2017 Chevrolet Equinox for up to $6,000 off MSRP. Go east and pay the lease. Lynn-Lyle Chevrolet, I-225 in East Colfax, or on the web at LynnLyleChevy.com. Chevy, find new roads.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio and a special edition of Your Money Matters, brought to you by Affordable Interest Mortgage. Once again, if you need any help with mortgages, they can do it. 720-895-0500 and their website, aimortgage.net.
Okay, you had brought up earlier healthcare, health insurance. We've had this conversation before. First time I heard it, I'm like, I never thought of it that way. So let's refresh everybody. What's the difference between health care and health insurance?
Health insurance is money that basically you're putting aside to help with a future, health care event. So, I mean, the insurance is just a way to pay for it. Health care is actually your provider, your facility, how they go about administering whatever it is, that you're in need of. And one affects the other because the provider obviously is dependent upon the insurance paying for things.
Correct.
So
they're not always partners.
No.
In most cases, they're kind of almost not partners.
No, and that's one of the things with, the Medicaid and for some cases the Medicare debate. And that is, where is the money going to come from to continue to pay the provider? And on Medicare, for years, we've talked about because of the baby boomers that we're getting ready to enter into those golden ages of how we're going to be able to finance Medicare.
Right.
And the solution has always been, well, let's give less to the provider. Let's cut their cost or let's cut their reimbursement. And every year, that's always a debate that goes in front of Congress. Do we do this? Don't we do it? And they usually don't do it. They don't cut it. But as more and more people enter into Medicare, and studies already show us, I think it's 2034, we're out of money.
Mm-hmm.
So what's that going to look like on the care side of things? Do we stop providing as much money to the provider? Do we say there's not as many services available in order to offset that cost? What do we do? Or do we go back to the taxpayer and say we got to increase taxes? And we're just talking about Medicare. But the same thing is true with Medicaid. I mean, Medicaid, Medicare, both government-run programs to a certain extent because the private sector does run those programs.
Right.
Okay? But if you look at Medicare right now, finding doctors can be a challenge. Not always, but it can be. But as we put more and more people into that system, and you have doctors retiring or whatever it might be, do we have enough people to service that population?
Especially if they start cutting how much.
Exactly.
Then they're going to say, I don't want to do that. You run across that with VA, too.
You run across, VA is a great example of that. Great example. I mean, and again, I did work in the VA and I did work in the private facilities in Denver. And, those people at the VA, the doctors and everything, I mean, they're tremendous people. But those are different systems. Mm-hmm. They're totally different. And that's difficult for, the common person out there to see and understand until you maybe unfortunately enter into, either or. But this has been my debate all along is, okay, we hear about one-payer system. If you go to a one-payer system, you realize Medicaid, Medicare, all that goes away.
Don't need it.
Don't need it.
It's gone.
It's gone. Okay? So now you're going to tell the doctors that you're only going to receive X amount of dollars from this one-payer system. So you have all these people that go in, going to get their health insurance now through the government. Sounds great. You got your insurance. Now let's start talking about the care. Doctor doesn't have to stay, or he doesn't have to accept that. He could say, you know what, I'm going to start my own private facility, and you can buy an insurance plan to help offset those costs, but you will also be paying for that one-payer system. Plus, if you want access to to better services, you're going to pay additional to that. Now, how many people do you think are going to be able to afford that? And do you think that that doctor is going to be able to control price on that? I mean, he can put his price wherever he wants.
Because he's going to have these people that are willing to pay it for that type of care.
That's exactly right.
Which is why they go to college, why they go to school, why they take all these classes, so that they can be really good at what they do.
What I thought was ironic and unfortunate too, let me say this, that Senator McCain, going through the things that he's gone through in his life, and I respect every thing that he has done, but I thought it was very ironic that he was voting on a health care bill and then he was going back to Mayo. Now think about that. You move to a one-payer system, how many people are going to have availability in Mayo? Mm-hmm. I don't know the answer, other than if I look at supply and demand, I look at numbers and economics, it won't be a lot of people.
Well, that leads into the next question. With where we are now, and Trump talks about just letting the whole thing implode. With the prices, where do you see prices going with this? I'm sorry, but I have it, so I know they're going up. But
they may exceed our mortgage pretty quick.
Well, again, in Colorado, we're talking as of today, an average of 23% across the board. Now, some companies, as you were mentioning earlier, Cigna, I think, has applied for a 41% increase. And again, these are what the insurance companies have applied for. It doesn't mean the Division of Insurance is going to accept it or whatever, but this is what they've applied for. We're talking about 2018, a 23% increase. Let's go back to 2014 when this law was put in place and look at what costs were then versus today. That's why I laugh when I see this is Trump's fault. Okay? Well, part of it, what they're talking about in the subsidies, and we can get into that a little bit later on, yes, there is a little bit of truth to that. But the ACA was failing before Trump was ever elected. Mm-hmm. You can't continue to increase prices 20-25% every year and say that people are going to afford that. Are wages staying with that? With that type of increase?
Not happening.
Let's go to the phones. Wally, thank you for holding. How are you, sir?
Good. How are you?
We're good, bud.
So, if I understand my history right, before the ACA took effect, you either bought your health care or you didn't. When you turned 68 or whatever it was, you went on Medicare. If you are indigent, then you could get Medicaid. And due to a Supreme Court challenge, there was the law put in place that if you showed up in an emergency room and didn't have any health care, they couldn't turn you away. Do I have that pretty much right?
Pretty much.
So what would happen right now if the ACA imploded, the House and the Senate did nothing to put in new health care? Would it go back to, are all these insurance companies going to go back and have to reprice things based on what real costs are and not what government costs are and what government mandates? Where are we going to be at if that happens?
If this thing implodes, I think what we did with insurance companies, Wally, was we basically took away their ability to calculate risk. And when we did that, when an insurance company can no longer determine what risks they want to accept or not accept, it becomes very difficult for them to stay in business. They basically become a bank.
Right.
And that's where this whole thing went south, is when they told the insurance companies, you have to accept everyone. Now, with that said, I don't have a problem. The pre-existing conditions thing, yes, there were some issues with that. My question is this: the pre-existing condition thing affected what percentage of our population? And we had risk pools prior. Every state was set up with a risk pool. And if you were caught in one of these situations, you went into a risk pool. Now, the risk pool to some people was expensive, but if you go back and look at 2013, what the premiums were in a risk pool versus what we're paying today, I would take the risk pool.
Well, I'll tell you in my situation, and I got Kaiser insurance as of February the 1st this year, and I did that because I looked at Christian Medishare, which is way more affordable for my wife and I, but I needed to have both my knees redone, and they had a 3-year waiting period on any pre-existing conditions. And so I went to Kaiser, and I'm having both my knees done by the end of the year, and then I'm going to go back or go to Christian Medishare because it's much more affordable.
Hey, Wally, and I don't mean to offend you here, but there's part.
You're not going to.
There's part of the problem right there. Is people kind of can jump in and jump out as they want.
And I understand that.
Yeah, and I don't blame you one bit because the premiums.
Nobody's blaming you.
Because the premiums at some point, what do you do? And I don't know the answer, but when I'm looking at 23% increases after whatever it was last year, at some point we're faced with the decision. You either eat or you buy insurance, and I think most people are going to favor eating. So then the question becomes.
I will tell you.
Go ahead.
The insurance was still not cheap. I mean, doing the Kaiser thing, but I was able to get a plan that I only had a $2,350 deductible for the year. I've already met that on the first knee, and going to be doing the second knee here towards the end of the year. So it's all in on in one fiscal year under one deductible. I look, and I understand exactly what you're saying, and you're not offending me by saying that. I was aware of all that when I did it, but I'm playing under the rules that have been set up.
Yeah,
but I understand what these rules are doing to the insurance companies. But I'm just wondering if the ACA implodes, is it going to go back to a full capitalistic system where? Really, I think one of the things that would help bring costs down would be interstate commerce on insurance plans. You get into some of these rural states like we have out here in the West, Montana, Wyoming, and some of these places, and there's just not a lot of choice of what those folks can get. Being in Denver, we have, I still think, a fair amount of choice, but, you can't go to Timbuktu, Montana, and have a Kaiser clinic. I mean, it's just not going to happen.
Wally, we'll let Greg answer. We're up against the break here, but, man, we appreciate the call, and I'll be in touch with you. Go ahead, Greg.
No, I mean, he brings up a great point. Yep. I mean, why? He's talking about lack of insurance companies. Well, again, Wyoming's had one for the last 2 years, so there's a perfect example.
Yep. It's got to be frustrating for from the insurance companies, it's frustrating. For the public, it's frustrating to us because it's costing us.
That's why it's going to implode, because there's a no-win for anybody.
Right.
Insurance companies get out of the business because they're not making any money. People quit doing insurance because they can't pay the money. And where do they go? It's going to implode. And maybe, like you said, maybe the best thing is, I agree, I don't want it to. But if you can't figure out how to sit down and have an intelligent conversation, then let it implode, because then you're going to be forced to do something.
Exactly. Special edition of Your Money Matters right here on Haystack Help Radio. We'll be right back.
Are you buying your first home? Or are you right-sizing or downsizing for lower maintenance or a lock-and-leave lifestyle? This is Pamela Meyer of Denver Home Navigators with Keller Williams. I can help you discover and reach those goals. This is more than just real estate. It's about your life and your dreams. Call me today for your free consultation at 303-506-0106. At Denver Home Navigators, we help map your course. It's all about you. Call me now at 303-506-0106 or visit my website at denverhomenavigators.com. I'm Pamela Meyer, the exclusive agent for Haystack Help Radio, and I look forward to talking with you soon.
Did you know that each and every day, 21 United States veterans commit suicide? Last year, active duty suicides surpassed the number of combat deaths. When soldiers come home, it is a huge adjustment, and they're often plagued with disabilities, such as immobility, PTSD, or a traumatic brain injury. You can help by donating to Freedom Service Dogs. This nonprofit rescues dogs from local shelters and trains them to become service dogs for these heroes. Help give back to those who have given so much. Donate now at freedomservicedogs.org.
At Lone Tree Veterinary Medical Center, we believe that all pets deserve to have a good life. And because we know that your pet will have many different needs throughout its life, we offer complete pet care services every day, all at one location. Whether your furry friend needs a checkup, advanced medical care, surgery, boarding, grooming, obedience training, food, care products, or toys, we are here for your pet 7 days a week. At Lone Tree Veterinary Medical Center, we know that you want the very best for your pet, which is why you can count on us to provide top-notch care in everything we do. We are certified with the highest rankings by the American Animal Hospital Association and hold a gold star rating with the Better Business Bureau. You and your pet can visit us Monday through Friday from 7 a.m. to 8 p.m., Saturday from 8 a.m. to 5 p.m., and Sunday from 10 a.m. to 5 p.m. We are located at 8681 East Lincoln Avenue in Lone Tree. Learn more about us by visiting our website at lonetreevet.com or just give us a call at 303-708-8050.
This is Scott Watley from my friends at Rampart Firearms in Sedalia. This is a great store, family owned and operated. They buy, sell, trade, and consign firearms. You will find a great selection of new and pre-owned handguns, shotguns, and rifles. If you can't find the gun you want, Rampart Firearms will special order your gun at no extra cost. Found a gun on the internet? Rampart Firearms will do one firearm transfer and the background check for only $10 if you mention Sportsman of Colorado. Rampart Firearms, 720-468-0050. That's 720-468-0050. Located at Highway 67 in Santa Fe in Sedalia. Rampart Firearms opens 7 days a week. 720-468-0050.
Denver's Afternoon Rush. Rush to Reason is coming up at 3. Now, back to Haystack Help Radio.
Welcome back to Haystack Help Radio. My name is Scott Watley, along with Kurt Rogers and Greg Lackey from Design Health. And I already brought it up. Let's take 2 seconds. Great Rockies game last night.
Bettis was it was beautiful watching him.
You could not have scripted for a game to go better for that guy.
No.
And, man, great,
7 innings.
Answer issue a couple of times. And, boy, to watch him pitch like he pitched was awesome, Greg. And we were talking about before we came on air, but that was cool.
One of my favorite moments was when Cargo led off the single in the 7th.
Yes.
And they knew Bettis wasn't coming back in for that. And they were wanting to get him that win in the worst way. And Cargo takes off and steals second. I think he'd only done it 3 times this year. But his motivation and his concentration. I mean, it
get
was
the run to get the win.
He wanted to get that. He wanted Bettis to have that win, and it was just such a beautiful scene in that dugout. I mean, that
was cool. Hopefully they can stay after it here. Man, they started off so good. I want them to get in the playoffs. All right.
I think they'll make the playoffs. The Dodgers just went on a streak that's just amazing.
Yeah, absolutely.
You were talking earlier about the Trump factor, how Trump is getting kind of shot in the head. He's getting shot in the head for everything. But concerning this Obamacare, why now all of a sudden it's his fault? Kind of explain what you meant there.
Okay. What happened with the ACA, it said if you were over 138% of the federal poverty level, you were entitled to a subsidy. If you were between 138% and 250%, you had a cost share. What cost share meant was that your deductible, instead of, if that plan said you had a $2,500 deductible, because you fell below that 250% level in income, your deductible might go down as low as $500. Okay, so that's the cost sharing side of it. The subsidy side was because you made 250%. Let's say that premium, a family of 4, let's say, was $1,000. But because you were at the 250% level, and again, I'm just using fictitious numbers here a little bit. Let's say that your cost was $300 for that plan. Your cost.
Right.
But the total cost of that plan was $1,000. That $700 a month difference was being paid by the federal government to the insurance companies, along with that reduction in deductibles. So whatever difference was needed to make up what that true cost of that plan was being done by the federal government.
So you might only be paying 30% of what the
You
total
might only be
cost
paying
is.
30%, but the insurance company was getting 100%.
Correct.
That other 70%, again, was coming from the federal government. What Trump has said is that he thinks that the subsidies and so forth, I mean, it's becoming unsustainable. And he wants to address it right now. Let's come up with a better idea. So he's kind of proposed the idea of, hey, we're not going to continue with these subsidies. We're not going to continue with the cost share. Well, then the insurance companies are looking at it going, wait a second. We're already getting hammered on this deal. If you take 70% of those dollars that are owed to us, and now you're saying we're not going to get them, well, their only choice is to get out of Dodge.
Yeah. Instead of having one in Wyoming, now you have none.
None. And the exchanges would just, I mean, they would collapse. So that is when you see reporters say, well, it's the Trump factor, or even our division of insurance person here made that comment, to a certain point, that is correct. However, the ACA was collapsing anyway. When you've got 20% increases year after year after year, tell me who's going to afford it. So to blame it all on him, I mean, that's a little bit short-sighted. I realize that it really sounds good today, and it fits the narrative. And anything that fits the narrative is met without resistance.
Okay, so if you using that thinking, so if they're not willing to get rid of Obamacare and the insurance companies get out, it's forcing us to go to a one-payer system.
That's where I've said all along, let's take this conversation.
We had this conversation.
Let's get it on right now.
What do you think? I mean, there are some people that like the one-payer system, but you had mentioned in the break about the Democrats and how they believe they want it. What do you think would happen?
We've seen 3 states in the last year have this discussion. One being Colorado. Yep. What was it, 80-20?
Yeah.
Including our Democratic governor?
Yes.
So if it's such a great idea, why was he against it? Why was Jerry Brown in California against it? Jerry Brown. Because they know deep down that the cost is unsustainable. So it becomes easier to say this is Trump's fault. If I'm the Republicans, I say, let's talk about a one-payer system because that seems to be the only direction you're willing to listen to right now.
There was a state back east, was it Connecticut, that they actually went to it.
Yeah.
Bailed.
Bailed on
Nevada.
Yeah.
Bailed quick.
Nevada talked about Medicaid for all. And that senator out there that was part of the Republican that was, whether he wasn't sure if he was in or out or so forth, okay, well, guess what? Nevada voted it down too. And so, I mean, again, it sounds great. The one-payer system sounds great. But the question is, who pays for it? The second question is, what does it do to your care? And do you want to be a part of all of that?
That's the difference between the health insurance.
Yeah.
I have insurance, but I have no quality of care.
We're complaining right now about not having access to the people we want to see. Well, when you move to a one-payer system, guess what, people? You have no voice. This is what you will do. This is what you will pay. My question is how many providers are going to be left? If you've got, let's say, 100 providers and 25 of them say, I'm out, you're left with 75 and you've got all this demand, what do you think that does to waiting times? Then all of a sudden what you have to do is you have to prioritize. And do you think people for 1 second are going to be happy with someone telling them, sorry, your situation isn't quite as bad as this person over here.
You got to wait 6 months.
You got to wait.
Like
And we're
Wally.
waiting 30 minutes in a waiting room.
You got to wait 6 months to have one need.
Exactly. So let's have this conversation. If I'm the Republican, I'm running right to it. Let's go. Let's get it on. Let's talk about it. Because I promise you would see the Democrats. Now, there is a certain percentage of that, the Bernie Sanders crowd, who still believes in Santa Claus and still believes in this. Okay?
He believes in free education.
Everything's got to be free. Again, it all sounds good. But so you would see the Democrats split just much like you've seen the Republicans split on which way to go with this.
And I asked you this during the last break, and we're going to take another one here in just a second. But, you know, it had seemed like when we were choosing plans over the last few years, and I'll just pick Cigna because that's who I have, there would be like 8, 10, 12 different plans under Cigna. Do you see not only maybe the insurers going away, but also the number of plans that we even have to pick from? Do you see those shrinking?
I do. And again, I'm not certain that there's a real need for a ton of plans. You know, I think that, you know, deductibles is kind of how people look at it. And if the max you're out of pocket, I think next year is $7,300. So if you have a $5,000 deductible, a $3,000, a $2,000, you know, 3 or 4 different plans in there, I think that pretty much catches everything. You know, prescription benefits, I mean, that can kind of vary in those plan designs. You know, a number of times you can see a doctor, et cetera. But yeah, I do think you'll see a reduction in number of plans available.
Okay. You're listening to Haystack Help Radio, special edition of Your Money Matters. One more break, and we'll be back with more right after this.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt, make that long-needed home improvement, or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? Paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR and MLS 298191. Equal credit lender.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam. 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical you'll see the difference. That's 303-321-1578, stackoptical.com.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
Hi, Dan Johnson, General Manager at Lynn Lyle Chevrolet. You know, I hear it all the time. If you give me a good enough deal, I'll buy your vehicle. So here it is. A 2017 Crew Cab 4x4 loaded for up to $11,000 off MSRP. Or how about a 2017 Chevy Cruze, sign and drive lease for only $199 a month? Heck, that's cheaper than a used car. And we'll pay top dollar for your trade-in. So go east and pay the lease. Lynn Lyle Chevrolet, I-225 in East Colfax, or on the web at lynnlylechevy.com. Chevy, find new roads.
No liberal media bias here. Rush to Reason, weekdays from 3 to 7 on KLZ.
Welcome back to Haystack Help Radio. If you're just joining us, my name is Scott Watley, along with Kurt Rogers from Affordable Interest Mortgage. Kurt's a sponsor of our show each week. Our guest today, Greg Lackey, designhealth.com is his website. His number, 303-625-9538, 303-625-9538. If you've got any more questions for Greg after the show, he'll be glad to take your call. So, Greg, take a minute and just tell us a little bit about your company, your business, and who you help.
Well, we help everyone, and you know, we do stuff on the health insurance side. We also do stuff on the auto, the home, commercial side of the insurance business. And basically, what we try to do is find ways that, you know, you are unknowingly or unwillingly transferring dollars to an insurance company when you might not have to do so. And you know, when it gets into the healthcare, again, I try to talk to people about different ideas, different solutions, so forth. Health savings accounts, I think, are such a great way to go. It's not for everyone, but it is a way to save a few dollars and put them in your pocket versus giving to an insurance company if you just understand how the plans work. And you know, the same is true on auto and home. And you know, auto rates in Colorado just continue to go up, and that's another story in itself. I mean, we're seeing that. You know, I talked to an underwriter the other day about it. I said, well, you know, what's the deal on this? And, you know, obviously, you know, going to a mechanic anymore to have something fixed, those costs have gone up.
I mean, I've seen deals where, I mean, it looked like $500, $800 to get fixed, and it's $4,500.
Yeah.
You know, I mean.
Yeah. And so the insurance company's paying that, and obviously that cost is getting transferred to, you know, to the insureds. But, you know, the other thing, too, is the number of un- and underinsured motorists in Colorado continues to go up. And, you know, there's a lot of reasons you can point at that. I asked an underwriter about one specific, and she said she wouldn't respond to that, and I said, you just did. So, but
that is something people need to check on their auto policy.
Absolutely.
Uninsured, underinsured, and MedPay.
Is
those three things right there
can
are
be
huge.
so huge to you. So again, we you know, we work as a broker. We're not married to a company. I work for the individual. I work for my clients. I don't have a dog in the race. I just, again, try to go out and find a company that best fits their needs.
And I have to say thank you very much, because I've had several customers that I've sent to you, and you were able to save them a lot of money and offer them things they didn't know were available. So I want to say thanks.
Well, no, I appreciate it, Kurt. And again, a lot of times it's just people unaware, or they haven't shopped it in a while. And they don't understand that they've been taking increases. In fact, I had a guy the other day say, hey, it's in my escrow, so I don't even know. You know, and I'm like, well, you're paying for it.
That's why your escrow is going up.
Exactly.
And now, November 1st is for open enrollment for a January 1st effective date, November 1st through December 15th. As we speak right now.
That's correct. And the exchange in Colorado, I think, if you buy a policy through them, is going to extend those dates a little bit. But again, I would plan on November 1 through December 15th, and I would get going with it November 1, because you can only imagine the burden that's going to be put on the insurance companies in trying to get people pushed through. So the earlier the better, if you want to have all your ID cards and everything ready on the 1st of January.
And I just want to bring up one question, because we're almost out of time. One of the positives from all of this that I've learned is I have to be more educated. I have to pay more attention to my health care, not just who I'm picking, but where I'm buying my drugs, shopping around for going into different places. Because now with mine, I have an HSA, and it's my money, so I'm paying more attention. We talked about deductibles, how some people want small deductibles, but our large deductible is actually better in time, because it'll force you to pay attention.
A lot of times people are going in, say, for, you know, knee replacement. And, if you do the math, sometimes it's better off to be with a bronze plan versus a gold plan. If you calculate, because again, there's a cap on the max out of pocket. And with an HSA, that cap on the max out of pocket is about $600 less than on a copay plan. And that copay plan is costing you roughly, let's say, $100, $120 more a month. So if you just figure, okay, I've got a cap on what I'm going to pay out that's $600 in my favor, and I'm going to pay $120 less in premium for that, well, you can do the math in that. And those are the things we try to help people decide. And you know, if they call and say, listen, I have this doctor, I take this prescription, what company best serves me? And we'll do the research for them. So when we meet, hey, here's one or two companies. Right now it's getting less and less, but you know, again, education is always, you know, that's always the key and always will be.
Sure. Well, Greg, thank you very much. Thanks for being with us here on Your Money Matters. Kurt, thank you, sir.
Okay, here's my disclosure.
All right.
Affordable Interest Mortgage, 7400 East Arapahoe Road, Suite 109, Centennial, Colorado, 80124. We are regulated by the Division of Real Estate. We're an equal credit lender, and our NMLS number is 298191.
Thank you very much, sir. And thank you for joining us today for Haystack Help Radio and a special edition of Your Money Matters. Once again, Affordable Interest Mortgage, your one-stop shop for all your mortgage needs. Give them a call, 720-895-0500. Hope everyone has a great day. We'll talk to you tomorrow. Leave it right here on KLZ 560.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.